What's up, everybody? Dave Bartosiak here, and I've got yet another chart of the day. This time, we're doing a little throwback session. That's right. We're throwing back to the 90s. The 90s. Remember when all the cool people had Blackberries? I remember. I didn't have one. But my boss did. Kind of think of it, he wasn't that cool. Let's go ahead and take a look at the chart here that I have pulled up for Blackberry. And something of note that I pointed this out in the other day is these incredible spikes here in Blackberry. And if you notice, these happened in 2020, 2021. And if you guys remember, this was sort of peak GameStop roaring kitty craziness. Okay, so that's all great, but let's just pretend that didn't happen, right? What I mean, it sounds silly for me to say that, but just in the grand scheme of things, these are really outliers. And note the overall trend is going in one direction, and that is down. Now we're going to be talking technicals on this. And how the picture is getting a little bit better. Blackberry is the Zacks ranked #1 strong buy right now. And if you look at them, you really start digging in, get a little more granular. They've got a ton of cash on the books, and where the stock is today, price of sales is 2.3, and they're supposed to have 10% revenue growth, I think, next year. So things should be looking a little bit better. But I don't want to get into fundamentals on this. I just want to talk technicals. I just want to talk about this chart. So, as always, you guys know me. I'm super boring. I'm always using this 200-day moving average. Part of the reason is because, I want this video to go out to the most amount of people that kind of can wrap their minds around what's happening. And so I like using the real basics, like the 50-day and the 200-day, because you can glean so much information from this. Now, granted, it's not the most sophisticated technical analysis system out there, but, we can show a bunch of Ichimoku clouds here and everybody can go cross-eyed, and I can pretend like I'm smarter, but in reality, I'm all about this KISS method. Keep it simple, stupid. So 200-day moving average overhead has been resistance for a while. Even when you get these jumps up above it, that selling pressure is just so much that it just continues in one direction, and that's to the downside. And you have some retests, even got an intraday move higher, which, again, I'm pretty sure that we had some roaring kitty action back then, and still, getting pounded down. But could something be changing here at Blackberry? So 50-day does a pretty good job of, attracting that price action. And I keep drawing these parallels here. I'm going to draw these parallels to the spring because that's what it's starting to feel like, where you had all this negativity and it sort of rounds and ticks up, right? So we've got the same scenario here where the stock is rounding out a bottom. Now, the real bottom here is that paranoid August 5th day when we all thought the Japanese yen trade was completely unwinding and the market was going to zero. So you can see this on tons of charts where that August 5th is their bottom. So it does bottom out there and then flirts with the 50-day. And now overhead, we've got this 200-day, right? Is a retest of the 200-day imminent? I believe it is. And why? Look at this recent move. Look at the strength. 1, 2, 3, a little bit of a down day. 4, 5. So 5 out of 6 days, basically, you have a rally here in Blackberry. Now, where's the next sort of line in the sand? Look at the September 30th high, 263. Where do we get to today? 260. So we're right there, right? And then 200-day lies overhead at 268. Now, what do you want to see on a break of the 200-day? Well, I'll tell you what you don't want to see. You don't want to see this. You don't want to see an intraday wick. You don't want to see a big gap up above it and then a sell-off, which is what happened. What you do want to see, if you get a gap up above it, is a retrace to it and a retest of that level, which gets bought. You get that, and you are in the clear, Blackberry, okay? If it can fight its way over that 200, stay above it, close above it, even if you get down intraday, right? If we have one of these candles that goes up above, comes down below intraday, but still manages to close above that level, that's a good sign. But there are times where it's going to close below that 200 day, and maybe the next day fights its way back up, right? So patience is going to pay on this one. And I want to find another something that exhibits this. So right here, using the 50 day instead of the 200. So you can see the rally up, close above the 50 day. Next day comes down, intraday test. So this was a great sign, but then it just stalled out and it ran out of gas and then went back down, right? So this was very constructive until it fell apart. And when you're looking at a stock that's been in a downtrend for a very long period of time, you're going to have this a lot. Here's another example, right? You get the rally up above. Then it opens at that 50-day, boom, now we're moving higher. And it's spent a few days moving higher until that negativity of the 200-day was just too much. Now, the 50-day is not as significant statistically as that 200-day is going to be. And here you can see another time. Look, big breakout from the 200-day. Looked like things were going to go great. Gap down, get nasty, retest that 200-day. There was a ton of supply up here selling the stock, right? Couldn't get past it, and then you got another big downside. So am I going to sit out here and tell you that this is it, it's over, Blackberry is going to go straight up from here? I mean, that'd be silly for me to say, right? Could you be cautiously optimistic here based on these longer term mega trends to the downside? Long-term mega trend to the downside that it could rally a little bit? Sure, but you got to have some faith in the company and the underlying. Where are they going to find money? Where is the growth going to come from? What's going to happen? I mean, their margins are good, but where's the innovation? Where's the growth going to come from? Because it's not like we're out there buying BlackBerry phones anymore. It's become more of like a security protocol kind of thing. But there you have it. So they have an investor day today, which is why I decided to make it my chart of the day. Could bring a little momentum to them in the short run. It's something to keep an eye on. All right, folks, there you have it for my chart of the day. Be sure to follow the author here. If you're on Zacks.com, on the article, there's a button around here somewhere. Subscribe to the YouTube channel and come back next week. That's right. Next Tuesday is going to be my next chart of the day, where I find something spectacular to talk about in the market. So for everybody here at Zacks.com, I'm Dave Bartosiak, and we will see you